The banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Jerome Powell expressing confidence in the state of the banking sector following yesterday's latest rate hike. But if the banking crisis again rears its ugly head, could it have implications for our nation's debt ceiling and potentially our credit rating? The national debt continues to rise, currently sitting at roughly $31.6 trillion. Joining us now to help break down some of the potential ripple effects from the recent woes in the banking sector is Stifel Chief Washington Policy Strategist Brian Gardner. Brian, always good to see you, sir. If you can connect the dots for us from the banking crisis potentially to our debt crisis and the ceiling, as well as, let's just say it, our credit rating as well.
Yeah, so we have the debt ceiling that has been breached. It's going to have to be raised probably sometime this summer. Treasury has some tools to manage the situation, but those don't last forever. They run out of them. And that X date, when they run out of those tools, probably this summer. We still don't know exactly when, but the banking situation does play into that. We're probably going to see a slowing down in the economy, a little contraction of credit. So receipts to the government, those cash flows are probably going to slow. Now, we're so close to that X date. Does it change it by a month? Probably not. We're probably talking days and weeks, but it does limit the time. One, it limits the time that the government has to pass a lift in the debt ceiling. And the other is that it just heightens the political risk that if Congress fails to act in a timely way. Like I said, we're probably going to see some kind of credit contraction and a slowing down in the economy as investors and businesses get more cautious. And a problem with the debt ceiling is just going to add to that. So there certainly is added political risk as the two come together going into the summer.
Brian, what about the debt ceiling bill becoming a vehicle potentially for a banking bill? Is that something that could potentially be on the table?
It could be. I mean, we really need to see how things play out. But, a debt ceiling bill is going to be a must-pass piece of legislation. Now, for a banking bill, there is a fast-track mechanism to increase deposit insurance. And that would not be amenable. So it's just deposit insurance, nothing else. Fast track. I think we're still a ways off from that. Let's just say for a second that doesn't happen. But later in the summer, the crisis in the situation in the banking industry is still not resolved, and lawmakers are looking to increase deposit insurance on their own without administration input. That debt ceiling bill starts to become attractive, and when that happens, you start to add on other features related to the banking industry, repealing some laws that were passed in 2018, adding some new features into banking regulation. It's very hard to predict, but what you can predict is that lawmakers are going to look at that debt ceiling bill as the way to get their agenda through.
And ultimately, when it comes to the debt ceiling, and both parties are guilty of political posturing going back decades, but unless it's TikTok, there is no bipartisan agreement on anything. Is there any chance that we do not get a deal on raising the debt ceiling?
I think the best way to look at it is that chances of not getting a deal in a timely way are low. We're probably going to get a deal, but those chances are uncomfortably high, even though they're low. And the longer this goes on, the more chance that there is for a mistake, that somebody drops the ball between the administration and Capitol Hill. The votes on Capitol Hill are going to be very tight. You have a Republican Party with conservatives that are pushing for aggressive spending cuts. Democrats are going to resist those. Neither party wants to look at revenue raisers, tax increases. There's not a lot of commonality yet. I think we could see something similar to 2011, where we kind of went through most of the year. No impact in the markets until we got past July 4th, at which point people looked around and realized they could actually mess this up. They could drop the ball on this. Then the equity market sold off substantially in July. And that move, that volatility in the markets is what really forced Congress to finally act. So a lot of times it's market action, market pressure that actually gets Washington to act. But that volatility is something that gets Washington there. That's something that investors have to think about as we get closer to the summer.
Brian, what about some of the political pressure that we have certainly seen on the Fed, especially over the last couple of weeks when we're linking the Fed here to the stress that we saw in the banking system? Because a lot of people were asking how Silicon Valley Bank got into the mess that it was in, why it was taking so much risk. Do you think that pressure, political pressure on the Fed, could that potentially increase even more?
I think it already is starting to increase. I don't know that we're ever going to get a point where the Fed is radically reconstituted, reformed, if you want. But calls to break up the Fed, audit the Fed, they're already starting. You have a handful of lawmakers in both parties that have been critical of the Fed's handling of monetary policy. This does, at first glance, seem to be a supervisory failure, and the Fed is both central bank and banking regulator. And so I think that the pressure and the calls from Capitol Hill to look at the Fed and make changes to the Fed, those are only going to grow. Do we get actually to a point where Congress changes the law on the Fed? They make big changes at the Fed? I'm kind of skeptical. But look, we have this a group of progressives in Congress among Democrats. You have this rising group of populists among Republicans who are very critical of the Fed. You could kind of have an interesting dynamic here. We're talking, Dave mentioned bipartisanship before. Here's a bipartisan way that lawmakers can come together. It's attacking the Fed. So it's very interesting political dynamics.
Anytime you've got Senator Scott, Rick Scott, and Elizabeth Warren working together, there is something interesting happening. You found
that's exactly my point.
Yeah.
Yep.
All right, Stifel's Brian Gardner. Good to see you, sir. Thank you.